So remember this, conceptually, the whole assets and liability exists in a bubble. We only care about that in 210. Don't try to justify anything like saying I have a debit card and I'm removing money. That's just going to confuse you. So let's do the balance sheet of you. Because they use really abstract concepts, like they'll give some company, some fake company that you've never heard of, and you're like, I don't really care. So let me see, you have a computer?
I have a computer.
You own it?
I own it.
Okay, that's an asset, right? So your computer, for simplicity, it's $100. Owner's equity is what you really own. That's it. That's all it means.
Okay.
It's just what you own. It means that the liability, you don't owe anything on it. So, boom. And then since this guy is debit, you have to memorize this and don't. Why is that called debit and that called credit? I don't know why I put it all.
Well, he uses
because we agree to call it that. That's all we care about. Just memorize it.
He uses DR and
credit
CR.
right. What's that?
He uses DR and CR.
I can do that too if I want. If you want, I'll do it.
You put the little R.
Yeah. Now we're consistent. He has a PhD. I have a master's degree, so we'll let him do that. So there. So this, we know this whole thing has to balance since there's this big equal sign. So you're a business. What do you want to sell?
Furniture.
Okay, you sell furniture. So we'll use that when we get to income statement. So computer's an asset, and you own the whole computer. Owner's equity. Do you have a car?
Yes, I do.
You're financing it?
True.
You make a payment on it?
My company pays for it, but I guess they do.
Well, let's just pretend. Let's say.
Let's say I'm financing it.
Okay. So if you have let's see, if you make a car payment, okay, it's got to go. Let's go. You have over here for it's $10,000, so you have a $10,000 liability ultimately over here. And each time you make a car payment on the liability, you have, say you make a car payment. Did he show you these little, they call them T-charts?
We just got into that today.
Okay, so if it's left, it's always debit. Right, it's credit. Why? Because we agree to call it that. We don't care about a debit card. We don't care about a credit card. So if I pay $100 for my car payment, right? It comes. I gotta pay cash, right? I'm sorry. Let's start us out. Let's start a little company out with some cash. Let's do this. So we have some cash.
I did want to apologize in advance that if I ask for a second or third explanation,
You could go third and fourth.
Yeah, I have severe ADHD, so I most likely will.
Okay, so let's give us $10,000 cash. Okay, and then bam, we have $10,000 cash. Because we own the cash, we're not financing cash, we have cash. So if we make a car payment of $100, so let's go, we make a car payment, it has to come out of cash, right? So did he give you the whole concept of the whole debit credit?
Yeah, he did. Mm-hmm.
So if we have a car payment right here, and if I have to pay $100 for the car payment, I lose some cash, right?
Sure.
So even though this guy's on the debit side, it is a credit. Credit just means if it's over here, I subtract from this guy. If I debit, it means I subtract from this guy. It means if it's over here on a liability, I have less of a liability because I have less of a car payment to make. If it's here, I have less cash to get. I have less cash here, so that's all it is. That's debit left, credit right. Why? Because we say it is. Again, we don't care about your debit card. We don't care about your credit card. So again, you got to memorize this. Assets equals liabilities plus